Hey, real life traders, friends, family, fans, followers from around the world. What's going on? It's your boy, Jeremy Alexander Newsome, with today's newest real life stock review. Here is the cues. And the cues today and the broader markets, I'm a little skeptical of this gap. This is a very nice retest gap, to say the least. We are up 2.35% on the day, and we are trading back into some moving averages. So you'll notice a little bit of an upper shadow. You got the 10, the 20 coming down. I really do think this gap gets filled on the cues. I'm not saying it will for sure. It just makes sense. With as volatile as we are, get a little bit of down day, end up filling this gap, probably trade back down to some of these lows. And then again, from there, most likely we get some type of bounce. I'm fine with it bouncing at these lows. You'll notice a decent little hammer candle here on the weekly. So we have what should be the low for a while on the weekly chart as we kind of retest some levels and just kind of hang out. But again, on the cues, you got the 100 simple is at 153.36. We could make it down to there, but of course, we all know if we take out this low of last week, we certainly are going lower. Here's the SPY and the SPY also putting in a decent lower shadow, almost hitting the 100 simple on a weekly, which is nice. So this daily time frame, been keeping an eye on it and watching it, and my analysis as of yesterday was if we have a large gap or higher tomorrow, watch for the bear fade. And you can see we did trade up, and here's the 5-minute chart. In fact, every time we made a new high of the day, you got some selling. So here's this new high of the day right here, and we got this nice little sell-off, and then some new highs of the days over here, and got a little bit of a sell-off. So not as tragic as it looks, but yeah. Here's the weekly chart, and the weekly chart, we're coming up and retesting the 50 EMA on a weekly from the bottom. And per Mr. Squiggles, it just makes a lot of sense for us to eventually fill this gap a little bit, trade back down to some of these supports, and then most likely start getting a little bit of a bounce down here. I think this is mostly the pullback on a lot of stocks, and we'll be looking at a few of them today, but realistically, I think we're just kind of chill out, relax, and rest for a little bit. Did play some trades today, and let's go look at those. So here's NVIDIA, NVDA. And NVIDIA was able to scalp it for a quick R based on this gap. So again, you have this huge white candle gapping up into the 10 EMA on the daily. First time we actually interacted with that, we didn't really even hit it on the 19th and the 17th of October, but we're just kind of chilling at it now. Here's the 5-minute charts, and actually played on a 3-minute time frame. So I'll come over here and scroll up. I'll see if I can find the posting. What time is it? 9:20. This is a little bit earlier than that. A little bit earlier than that. Here it is. So looking to scalp is 8:43 a.m. And so this was the post. Just mentioning it's going to be kind of a quick little move. So on the 3-minute chart here, pretty much, I mean, you got this bullish high wave candle. The lows of these two candles were exactly the same. So once it broke below, and then this candle, right, this high wave candle formed, the entry was right below that, and the stop was right above it. And I did not cancel when this lower shadow, sorry, this upper shadow and this upper shadow came in. And then as it broke down, believe it or not, it doesn't look like 1R, but that's 1R. And it also was coming into the 10 EMA on the 5-minute chart. So it pulled into the 10 EMA on the 5. That was where some traders exited and were able to scalp a quick little R. Then on BAX, I really kind of, I play this one semi-poorly. I give myself an F on this trade. Here's the weekly chart on BAX, and I forgot to check the long terms on a weekly. I did feel like the gap was a little bit far, and it was a dividend-paying stock with a new 52-week low, also at the 100 simple moving average on the weekly chart. So here's the 5-minute chart, and I played my favorite candle, high wave, bullish, 5-minute candle, entry below, stop above. And then when this came down, this came, and this upper shadow got formed, I moved the stop down, as you can see. got stopped out. Literally for it to only just roll right over where I could have actually ended up making about an R on that trade. So that's kind of lame. Move the stop too fast, I guess. I mean, here's your exponential moving averages, and we hadn't even hit the 10 yet. So I guess I just let the fear of losing talk me out of holding that stop where it needed to be. But the good news is I did play T-Mobile, and this was my favorite gap of the day. In fact, this was the only gap I had on my list 3 minutes before market open. I just liked it so much. This was obviously a bullish gap and go on T-Mobile. I talked about this one yesterday afternoon during Tech Giant Tuesday, and I mentioned if this thing opened above these pivots right here, I'd have to trade it bullish. It was just trapping too many people. You had a double top right here that closed below, that retested. So you know some people were going bearish on T-Mobile, and they were all trapped this morning. So this particular setup was really just buying the S-curve on a pullback, right, on a 3-minute chart. So here's the 3-minute time frame, and if I kind of hop over and turn off all the moving averages and just kind of zoom out over here, it really was just a buy the dip. Setting up the entry above a pre-market resistance, a bunch of white candles came in, S-curved, and that was it. And target at 69.35, which realistically was kind of just an arbitrary number that I just randomly kind of picked, but it did coincide very nicely with this resistance right here. So if you played T-Mobile, well done, great trade, and nice little setup. So those are the 3 that I played today. Overall, October, I did have 2 weeks where I didn't trade at all, but I still feel like it was a pretty abysmal record at only 1.9 Rs for the month of October. Most of that was because a lot of swing trades were getting stopped out and wicked out. It was almost like my day trading was paying for my swing trading habit this month, but that's okay. November will be a 10R month for me. I will will it to happen. I will just outwork it. I'm going to make it occur. Best setups possible, best trades possible. We're going to be doing tons of back trading. Very similar to what I did in August, right? July wasn't a great month for me, and then I just made August happen. August was a really good month, so it's coming at it again. Going to do it again. It's going to be exceptional. Let's go look at some stocks that were moving nicely today. And again, Netflix, Mr. Squiggles thought it was going to retest. I thought it was going to retest, and it is retesting. Decent upper shadow, retest gap. I don't know, team. This gap today just seemed a little too good. I'm not saying that it can't go higher and that we won't, but it would just make sense. Even if we hold up here for another 2-3 days or a week or two, and then we roll down, make some lower lows, it just makes loads of sense for that to occur. Will it? I don't know, but I'm kind of planning on potentially that to occur. Here's Square. Square was up nice today, 6.5%, almost 7%. And a lot of traders do have a $70 put sale expiring this Friday. That would be really cool. If that expires worthless, we will see. 2 stocks that I had a lot of requests on today were Facebook, ticker symbol FB, and got to give a shout out to my good buddy John Salvio because John played Facebook really well. Brandon Robles also analyzed Facebook fantastically. I was mentioning if Facebook doesn't fade immediately at open, which it did. So I mentioned she will retest. Right, so it did retest, it did fade, and it was kind of an obvious fade. Just a bunch of buying yesterday. Pretty decent gap up on Facebook. Here's the 5-minute chart, and this one was quite fun. So you had the immediate fade in the morning, right? Quick fade. Here's the bounce. It double topped right into the 10. Here's your morning star reversal on the 10 that never broke higher. Right, never made that higher high, and right when it broke that 10, that was the spot to get in bearish if you were going to play it bearish, which my buddy John Salvio did. And he made 2 Rs off that move right there. And then it double bottomed, and we were looking at this, just never got filled on a trade. It just slowly kind of meandered higher. So what's Facebook going to do now? Well, their earnings were really good. They made $13.7 billion in revenue. That's really not shabby, and their earnings per share were good. So I'm kind of thinking that we're going to hang out here for a little bit. The warning sign, in my opinion, would be a close below the low of today. So if we close realistically below here, which is, let's see, bearish end of day. Yeah, so if we close tomorrow below 148.84 or something like that, 149.22, if we close below the low of today, I do think we are going to just slowly creep lower, fill that gap on Facebook. And of course, obviously on the weekly chart, if we have any need, we have no need to close below the low of this week on Facebook. And if we do, certainly going lower on FB. But I actually did like the gap. I like the earnings, and I'm going to be watching it really closely on the hourly chart for a bullish continuation. More specifically, if we break above the highs right here. So if we break above these highs, 153.73, I could really dig that. And also tomorrow, kind of keeping an eye on Facebook to maybe trade back down into these areas and bounce off of them, right? That's why I mentioned close below here. It probably won't close below. So yeah, if it breaks above 153.73, I mean, I'd love for Facebook to go up a little bit higher into about the 162 realm, and then we'll just kind of get a chance to see what it does, but that will be a place for it to pause. Apple posting earnings very soon, and my analysis on Apple is quite simple. As long as Apple does not gap down into the red zone, which is below the low of the 29th of October. If it does that, the market will go lower. It'll probably fade if Apple gaps down and opens above that price. So again, if it gaps down into here, we probably trade up higher, get a candle like this. So we gap down, we trade up into here. And we could gap down and just immediately start fading so we don't get a chance to go bearish. But if we gap down and show any kind of weakness below the 100, which is really right where this price is, it's going to be a little bit rough for the market and for Apple. But I don't expect that to happen. I kind of expect either a gap up or a small gap down that gets faded, or really nothing. Maybe a super small gap, maybe gaps up here or something, kind of closes a little bit of a bullish candle, and then we end up filling the gap and trade down to here and then end up bouncing, something like that. We'll see. Overall, though, I like Apple, obviously long-term, still big fan. Let's just see what it does on earnings with this gap, and I do think this gap eventually gets filled on most of the market anyway. And the other two that I had requested, Micron Technology. Happy to see a little bit of buying come in on Micron, ticker symbol MU. And Micron closed today at 37.72. Here's the weekly chart, and it's going to try to come back and retest the 100 simple moving average, which is $39.28. If it does that, most likely you'll see a few traders sell some covered calls up in this general area for maybe December or even January. Trade up into here, probably pulls back, and probably eventually slowly chops around and I think goes higher. We'll see. Obviously, I don't know for sure. But this is a good spot for it to kind of get a bounce. And obviously, I like the protective puts here. It's a smart place to have them just in case the market gets a little squirrely and continues lower. But the daily chart on MU, if I just hide everything right now, I do like today's volume. I also like today's gap. And I'm keeping an eye on Micron to slowly trade up a little bit higher into the 20 EMA. And then from there, just hang out where I probably will end up selling a put to offset the cost of these puts. And we'll see if those expire worthless, and then I'll have a little bit more of a setup and able to figure out what price I need for Micron to break before I get into any other puts on that one. So for right now, it's kind of hanging out on MU, doing its thing, chilling. And then here's, is this Constellation Brands? Yes, STZ. Constellation Brands, interesting price. What you'll notice is that we traded down to the 100 simple on a weekly chart, and you have a little bit of a support resistance right about here. You got some lower highs right about there. You got some volume. We're chilling at the 100 area. The question is, will it bounce? And that's the thing that only time will tell. We've bounced down here before, so if you were looking at picking up some shares of Constellation Brands or going bullish, I mean, this would be where you would do it. And then, of course, if it doesn't bounce and it breaks lower, then yeah, there's going to be a little bit of a bearish sentiment. But most importantly, I think this little candle right here, if I was looking at going bullish, I'd probably get in above 203.13, or just watch this hourly chart a little bit, and you can see we had a white candle gapping up on the hourly. It's a retest gap. We've retested, and now we're going to try to see if we can double bottom out of here. So if we break above that neckline on Constellation Brands, that you could see a little bit of a squeamish move higher. And last but not least, here is STX, Seagate Technology. STX having a pretty awful sell-off as well, but it did close bullish with a bullish candle on the 26th. We will see what it does on earnings. As long as Constellation Brands doesn't, Seagate doesn't gap down below 36.50 and some change on earnings, we should start to see a little bit of recovery on this particular stock. If it does gap down below 36.50 though on earnings, it's going to get wrecked. Here's some higher lows, and again, we kind of already taken those out because that was pretty higher lows and higher highs. So yeah, this is the kind of the line in the sand for Seagate Technology. We gap down below that particular price. Some people will be trapped. Going to be a really exciting Thursday and Friday. Earnings season still here. A whole heap ton of stuff still transpiring. Ladies and gentlemen, let's continue forging ahead, enriching lives. The good news is, as crazy as a month of October as it was, we did have some real-life traders slowly squeak out some profits. My buddy Julian mentioned that he paid back for his leap with protective puts on Facebook, right? So he's been playing protective puts on Facebook with a long-term call. So congrats, Julian. That's really wonderful, man. Very happy to hear that. Let me scroll down here and try to figure out where these great posts begin, because I really think it starts us off with it's awesome. Mark says he got 6 trades and netted 3.74 Rs. Congratulations, Mark. 6 trades taken in October. Way to be calm and patient. That is terrific. Tony said today sucked, but still up for the month. That's always really good to know. And let me keep scrolling down here. Falco says he's going to be down 1 Rs for the month. Think about that. Just down 1 singular tiny R. What an amazing opportunity to springboard and come back from that. That's truly wonderful. My buddy Brian snagging 3.4 Rs for the month. Drake Russell getting 3.2. Solid. Dave says down 2.1 for day trades and 4 on swings, but he does have several option swings due next month. They're going to be doing real good so far. So again, the good news is a lot of traders, they have some unrealized losses and or gains that they're looking at closing out in November. I know I was in that position for some point for sure, but the good news is you figure it out, you make some tweaks, you're able to grow from that, you're able to look at the overall account, and you're able to manage your own money because you're the one that's going to care more about it than anyone else will. Keep in mind, most 401ks or IRAs or managed money, mutual funds, most funds you're up or down around 1% so far for the year. A lot of the people that I talk to and that I know just who keep managed money, that's what they're looking at. So keep that in perspective. If you are up more than 1% so far in 2018, you are beating the vast majority of managed money or mutual funds, which that's exactly what you would be doing if you had your money in those. And really, most of those gains are entirely because of Amazon and Apple anyway, as those two are some of the biggest managed and invested mutual fund stocks anyway. All right, off my soapbox. Folks, you're amazing. Thank you so much for absolutely crushing that month of October. Feel free to post in the comment section below, how did you do for October? The good, the bad, the ugly. Feel free to share. We can only grow from the challenges, trials, and tribulations of which we've looked at, we've measured, and we figure out how to improve from there. Tomorrow begins a new month, which begins a new challenge. So much transpiring. I love it. I'll see you all later. And until then, love life, live life, and trade it. You guys rock. Bye. Hey, you made it to the end of the video. Thank you so much. I truly appreciate it. If you like that video, click that subscribe button and click this one right here because you're going to absolutely love that video as well.